Hello everybody, welcome to episode 8 of my Chart Annotation Review Series. If you haven't already, feel free to check out episode 1. That's sort of just the introduction to all of this. Also feel free to check out my Discord where I go in depth to each and every concept. And you can get a free trial there, get access to a free course with a bunch of lessons. So yeah, starting off with this, we'll hide these annotations and go to a daily. So for determining our bias, you can see that we are having a bullish move. We just took out all-time highs, and this is the weekly open. We're just making our way up. If we go down to the 4-hour, you could see that every 4-hour fair value gap that we have tapped into has gotten respected. We're in another one now. It's probably going to get respected, most likely. You can also see that there's a popular trend of anytime from 10 p.m. to like 6 a.m. we start a down move, right? Same thing here, 10 p.m. to 6 p.m. we start a down move. 10 p.m. to 6 a.m. a down move, right? This one we actually went up afterwards. But then again here, 10 p.m. to, again, 6 a.m. we're probably going to have a little bit of a down move. And then after that, possibly go up. So my bias, according to this, if you're to think about this as a repeating pattern of this, I expect us to start the day going lower and then finish off being higher. If we go back to the 1 minute, you can see that we have been trading above the daily open all of the previous night, and in the overnight session we have dipped down. We're right here. Now I'm going to turn back on the annotations. Now you can kind of see in the future what's going to happen, but I am going to explain why price moves the way it does. So starting off here, we have this macro from 5:50 to 6:10 a.m. And here we just watch structure, right? Create a high, create a low here. This creates an SMT, meaning that we had a divergence between ES and NQ. So this indicates a reversal. And two things here. One, we are in a downtrend, and two, we are entering a macro. So this means that we should reverse the upside. A macro reverses us on the opposite side of the trend previous to that. So if we have a downtrend, this macro should reverse us and lead us to the upside. So in addition to that, we have a bullish SMT. And do we get a reaction off of it? We do, right? We have these up close candles. So this low now is protected, meaning that this high should get taken. Either this high gets taken or we form an SMT up here before this low gets taken. So this is exactly what happens here. There we go. You can also see that we tap this 1 minute. You could take a possible entry in here, although I wouldn't, because for a macro, for the macro model, for the reversal, you want to see price close above a recent high and then retrace down. Here, these didn't really close above a recent high. They went above a recent high like this, but they didn't close above it. So right here, we create an SMT. So now that we have a rejection off this SMT, this is going to be a protected high, and then this is the TP. So now this should get taken. So we just watch price here. We go through this 1 minute and take out this protected low. So now watching price a little more, we form an SMT up here. We could hit next the SMT TP. This also taps into a discount of this move and into this 1 minute to then go higher. We create another SMT right here. Here's your SMT TP. This low should not get hit. Now this TP got hit. Now this high got hit. This low can now get hit. But we just start moving up here. We have this previous protected high. That is a pretty strong draw of liquidity. We take that there, and we end up having a massive pump around 7 a.m. After this, we create a bearish SMT up at these highs, retesting this 15-minute fair value gap and 1 hour fair value gap. So that is very, very bearish. We also have displacement down. So this high is protected. We should not go back up to this high until this low is taken or we form an SMT. So we go up here. We do a pretty big retracement. We come back up. We actually sweep this high. And after this, I expect us to have a massive sell-off. Right, there's a sell-off. You can also think of this as the internal sweep, but leaving external sweep model. So we sweep internal. So we have this external high and we have this internal high. We sweep internal high, but we leave the external high just to go lower. Here's a fair value gap. We actually disrespect it to go a little bit higher. Right, we're just sort of chopping here, not really going anywhere. So now we're working our way down. So from this, this macro should, well, it doesn't mean that it should, but it's an indicator that there's a reversal that could happen here. The only thing is that we have a protected high right here and we kind of want to go lower. So this macro may just be a continuation. So out of this leg right here, retrace to premium, should sell a little bit lower here. There we go. A little retrace up to here. We sell off. We create this SMT. So this low should not get hit until this high is taken. You can also see that this macro did reverse the move. We had an uptrend, right? Low put in, and we sold off. This right here reversed the move of this move. And then we come back up here. We don't take out this low, right? Because we don't, this is protected low, so we should not take this out until this high is taken. And there we go. The high is taken. Forming some more structure here. We have a little bit of a buy model. We end up taking this previously protected high from this massive SMT. And in this case scenario, you'll notice that we didn't actually head all the way down to this low until this protected high was taken. So sometimes that can happen, especially if it's a massive SMT. But in addition to creating this protected high, we created another SMT to go lower. So yeah, and we have this new protected high up here. This SMT TP gets hit, and then we come down here and we draw an OTE, and this OTE aligns with this 5 minute and this 1 minute, which OTE is 70.5% or 0.705. We are respecting it because we wick it, right? The bodies hold above it. So you could expect us to possibly head higher, maybe take out this protected high before we take out this low right here. So we have an uptrend into this. I want to possibly see a reversal, but we do have this protected high that this is the draw of liquidity towards, so I don't expect us to reverse until we take this high. So we took the high now, and we kind of did reverse to go to discount of this leg. We also did respect this fair value gap, this 1 minute fair value gap, and 5 minute fair value gap. But we get a buy model to the upside. We take out this buy side liquidity. After that, we sell off here. We form another SMT down at these lows. So with this SMT, this low should be protected, especially after displacement up like this. And we also have this SMT TP. This is the draw of liquidity. Now this is going to be a really good setup. This is the first setup I'm showing you where I would actually start to think about taking entry with regular size. So we have this lower SMT. We also have these wicks respecting these fair value gaps. And we have this SMT TP up here. We're also in a downtrend and we're entering a macro soon, which should reverse this to the upside. So here we actually buy back up. And it actually looks like we kind of take this right away. So maybe not yet I would take a position. It's just watching structure. You can also see that this is kind of an uptrend going into the macro. We displace above below, we tap into this fair value gap. You could still see we sort of respect this fair value gap. We don't have any bodies close above this candle's high. So we're still respecting this fair value gap, but if you did put your stop at this high, you would get stopped out. Then we sell off here. Now we tap into this 1 minute fair value gap, which is in discount of the range. And sort of just chop here. We're sort of just chopping a bunch here. Here we form equal lows. And right here is where you could look to take an entry. Now, the reason why, this would not really be that probable of an entry, to be honest with you. But we have this 1 minute fair value gap, and you could see that it has got respected in the past, right? So that means if we come back to this fair value gap, there's a higher chance that we are going to respect this again. Number two, we also have these double lows. We have these equal lows right here. And I was looking for them to get sweeped. And you can also see they line perfectly with the fair value gap. So if we sweep this, we'll tap it to the fair value gap. So my entry could be off of the sweep. And then possibly off of the sweep of this low. And you can actually see we came down and tapped to OTE here. And then came back up. So after that, my target would be the highs. We're sort of just chopping here. We go down, we tap OTE again. We actually form equal lows, which would not be nice to see. Out of this little range, tap discount. Right, we're just keep tapping this 1 minute. And right here is where we get our first like extension move up with a fair value gap. So if you wanted to add into the position, you could possibly put a position right here. But also, look at this. We have a downtrend going into this macro. It's sort of choppy, but it's sort of more of a downtrend, right? You have these big red candles and this big move down here. The macro is supposed to reverse it. Plus, we have all these bullish PD arrays. So we get a move up here with the macro. This would be an entry in this fair value gap. Stop would be at the bottom of this low. Right here, bottom of the low of the fair value gap candle. We also tap discount of this leg right here. And we had higher. My TP would be up here at this high. And you could also scale along these highs as well. But right there, Mac reversed the move. So now we're just chopping here. Right, just very, very choppy. And you can tell if you have watched the previous episodes to this series, this day right here is crap. This day is terrible. There's not really that high, there's not that many high quality entries that I would usually like to see. This day just kind of sucks. But now we create an SMT here. We sweep these equal lows. That's very bullish. I want to see this high get taken. This is your SMT TP. I want to see this get taken before this low gets taken. So we have a downtrend going into this macro. I want to see us possibly reverse. This is our recent high, so I want to see us market structure shift above this high possibly. So here we do close above it. Is there a PD array that we may bounce off of? We sort of have this order block. It's not really too clear though, but we do have this order block here. So we are consolidating here, and that could be your entry to then go higher. Really not that clear though. So most likely me, I probably would not take an entry because there's no fair value gap, there's no displacement up. right? We barely close above that high. But we come up a little bit. Macro is finished, so the move can theoretically be finished. I'm actually going to put this all back. Okay. Now, just kind of consolidating it up here. A lot of consolidation today, right? We have a lot of it here, a lot of it here. Right here we have consolidation. All of this is consolidation. This day clearly sucks. But we have an SMT up at these highs. Sell off back down. We take out this SMT TP. Now we're into discount of this leg right here. I believe. Actually, no, we're not. Well, of this leg, yeah, we're in discount of this leg. But what I was really looking for was this leg right here. So this leg right here, we tap discount. In addition to tapping discount, we form an SMT up here. This SMT also is adding to the strength of it. So we have both these protected highs up here. And this would be your SMT TP out of this SMT. So now I want to see this get taken. We've also tapped into premium. So now that gets taken very strongly. We head a lower. Now we create this bear or this bullish SMT right here. Watching structure a little more, you could actually take an entry off of here, and the reason I say that is because so SMT is turtle soup, right? We sell off, we take this low, and we buy back up. This SMT is formed, followed by a strong move back up. With turtle soup, you can have your first entry targeting the first fair value gap that you tap into. Now there's a bunch of different ways to trade turtle soup, but there's that. You could have your first entry here, buy back up a little bit more. This would be your second entry. This would be your, well, this would be a more higher quality entry. Now, you could, in theory, you could have entered off of this, but we actually sort of didn't really respect this. We didn't close below this though. We did not close below this fair value, or this candle right here that created the fair value gap, but we did tap into this one. So in this case, if I ever do see this, what I personally do, I probably would enter into here, into this first fair value gap, right? And then I would see and find out how long my stop is. So this is a 3.5. With entering up here and taking this stop, it's only like 4 points. So I would definitely take an entry here, put my stop down here. Because there's two fair value gaps next to each other, we could really respect either one. In addition though, actually it would be a little difficult, but we do have this breaker right here. So the way I trade breakers, people trade them a little differently, but I find the most success when looking at a breaker, you find two highs, or you find a high right here. So as you can see, we go up, go down, go up, go down. This right here is two equal highs where the bodies are equal. So this is where it would be a breaker. This one could be one as well. So we go up here and we just buy all the way up to here. Here's your first TP. Right, little dip buy for value gap entry. Second TP. And these double protected highs would be nice to see. But also, again, this is a macro. So we're having an uptrend. We could possibly see a reversal. This is a strong candle down. It kind of looks like a breakaway candle to me. And so now right here, we have market structure shift. Now, if I was to look into a trade, I probably would look to take an entry into this fair value gap to go short, but we don't. We end up just moving all the way down and taking out all these protected lows. And we go down to take this protected low. So another thing, this day is not good. right? Some days in the market are very low quality, and here's why I say this. Number one, we had this SMT right here, and we actually took the protected low before we took the protected high, or before we took the SMT TP. Same thing with this SMT right here. We took the protected low before we took the protected high. And same for, what am I looking at here? This is a bit confusing, but we were taking the protected highs and lows before taking the SMT TPs for some of them. And that kind of just shows you, if that happens like 2 times in the morning, I just wouldn't trade the rest of the day, because you know price is not going to be that efficient. But right here would be your reversal point. Again though, since this day is low quality, it's not going to give you entries. So you can see right here, it would actually be technically right here, but I'll just mark it as right here because it looks a little nicer. This is technically your market structure shift, right? But with the market structure shift, you need to rebalance back up. And usually the market will give you a rebalance back up. But if the day is crap like this all day, it probably won't even give you an entry. You could see we never even came back. We just came and took all of these lows. Now, yes, we did get a little entry here, but these lows have already been taken. I don't really care to catch a move like this, just because this low is not guaranteed. All right, so now we're forming more structure, kind of consolidating after this. We create an SMT here. This will be your protected high. SMT TP is hit right away. We come all the way down here. Again, sort of chopping most of the day here. And we go all the way down to take out this low. This low ends up being a sweep. We tap premium with this range, possible to go lower here. Sort of consolidating again. Here we take this low, here we take these relative equal lows, but we also form a massive SMT. And we get nice displacement up. So this will be your protected low. And this SMT states that all the way up here at this high should get taken next. So let's see if that happens. Let's see if possibly the second part of the day cleans up. So usually the first part of the day sucks, right? But there's a chance that the second part of the day may be really good. It also looks like we had 2 p.m. news here. So that may have also increased action. Usually after we have news during a day, we'll have a lot better action the rest of the day. So let's pretend this is a new part of the day, right? And let's look for some really good trades. So we have SMT here, we have massive displacement up. What happens when we get into this fair value gap? We're respecting off of it. So here's your confirmation entry. This right here is showing you that this SMT is in play. So now I want to look for another entry in the next fair value gap that we create. So here we are just sort of chopping. Now, before we create any sort of move to go even higher, we can find a move to go lower, right? A little internal move. So right here is a great example. We have an uptrend right here, and we're about to enter a macro. Now we still have to rebalance down to here. We may possibly rebalance back into this 1 minute. But we do have to, we should rebalance price, especially because we're in an uptrend going into this macro. I want to see some sort of reversal. So right when we enter the macro, we get displacement down and we get a fair value gap. I would be looking to take an entry into here for this macro to reverse the move down. So your stop can be at the top of this candle, and this would successfully play out. You could put a TP here, a TP at this low. We also, you could see that we respected OTE of this range, and we respected this fair value gap, which is right at OTE. So now after this, if this respects, I would look to find a long going all the way up to these protected highs and this high up here, all the way at the top of the range, because that is what the model is. It's a massive external model. This is all just one massive external model, and this high should get taken. So this is a great opportunity to catch a massive move. So we buy back up here. Here's your fair value gap entry that you're looking for. We tap into it. Now I would put my stop down at this low, just in case we tap into this fair value gap. This would give you a 11-point stop, right? Not too bad for a model like this. We end up coming down. We respect both these fair value gaps, and first TP would be at these relative equal highs. So that gets hit. This protected high gets hit. So already you can see massive move. Now what do? We're rebalancing. Here is the standard deviation. Most likely you would take most off here, kind of let price rebalance, and then I would look for another entry to go long at some point. So we come down here, and again we tap OTE and we respect off of it. After we respect off of it, we get massive displacement up. Here's the first fair value gap that we see, and we can get an entry into this whenever we can. Looks like so far we don't. We'd end up taking this high, massive displacement up. And then if you're taking this range right here, you could possibly take an entry in this fair value gap that we were wanting to take a little earlier. We sell off here into a discount. There's your entry. You could put your stop at this candle's low or this candle's low, whatever you feel like doing. But we tap in a discount. We may get a little smaller internal move. So right here, we actually had a massive candle. So most likely if you dead enter here, because of this massive news candle at 420, you would get stopped out. This would kind of be a difficult move to do. Let me look at the next candle. Yeah, I don't know. This move would probably be pretty difficult. But what you could see, we also respected this 1 minute. But yeah, this day kind of sucks. This was at 420. This was the end of the day. This was a little bit after market. I probably would not trade it a little bit. I would probably not trade at this at all. But you can still see, even when the market isn't following what traders would do, it still follows the algorithm. Like for example, you take an entry right here. This wick right here does not invalidate the move. We still respected the model perfectly. Wicks do not matter in the model. It's only the bodies. So right here, this wick came all the way down, swept this liquidity, and bought up to take out the highs that we've been waiting for all day. And then we create a massive SMT down here, or up there, and price should just consolidate the rest of the day. Sort of. Actually, it's moving a little bit, but that's probably because we just had news. We come down, tap into this 1 minute for value gap, and now this is where we consolidate. Have a little gap up there, but really nothing else left. So that's really all I have. I'm not going to do a slideshow for this episode just because the models are really not that clear in this day, but I will probably provide a slideshow thingy on Thursday and Fridays, because I do believe Thursday and Friday's action was really, really good. So that's all I have for this video. Again, feel free to check out my Discord server. It is free. You can get a free trial and get access to a course, get access to my live trading, which starts in like a couple days. It starts Monday of next week. And yeah.